Hello everyone and welcome back to the sessions on Economics for Finance. This is the continuation of the topic Keynesian Theory of Income Determination, and this will be the third lecture on this topic. Now in the previous class we have learned determination of equilibrium income as per Keynesian theory under three sector economy. Now we are talking about the four sector economy. So actually speaking, after learning three sector model or three sector economy, learning anything about four sector economy is just a cakewalk. You just have to add the fourth sector, which will be the rest of the world or all entities and people outside the domestic territory of your country. So in this fourth sector model, we are going to just highlight one additional connection that will be with the rest of the world. Other things will be exactly as per the three sector model. So this is just a small extension to three sector model. Let us write something about this. Under the four sector model, please write the four sector model includes all four macroeconomic sectors, that is the household sector, the business sector, the government sector and the foreign sector. The foreign sector includes household businesses and governments that reside in other countries. So basically, when we were talking about three sector model, we have taken the household sector, business sector and government sector of our country. Now we will be having multiple other countries which each will include all these three sectors, that is household, business and government of those respective countries. Let me take you ahead and show you the circular flow of income under four sector economy. As I told you, it is exactly similar to three sector model with one additional tab introduced over here as rest of the world. Now just look at one thing, all these flows of income, goods and services have been exactly like the three sector model. I am just talking about the changes which will be experienced in four sector model. Look at the way households are connected to rest of the world. Households are connected to rest of the world generally by making imports. So when imports are made, the products will be coming to the household, which will be part of the consumption expenditure of the household, correct? That is a private final consumption expenditure. That is why when we determine income, we subtract imports, because these goods which were consumed by household were not produced within the domestic territory of your country. Now look at one thing, the product market will have exports which will go to the rest of the world, and then you could see one more flow over here, that is the net capital flow. So the involvement of rest of the world could be also for borrowing money or having capital assistance from countries outside India, and that will be routed through the factor market. The point is, don't try to connect that with the financial market, because this financial market would represent the financial market in India. So foreign borrowings cannot be raised in Indian financial market. Foreign borrowings have to be raised directly from the other countries, and therefore it will be routed through the factor market, and finally it will flow to the business in the form of capital supplies. So you could even connect the rest of the world net capital flow directly to business as well, instead of routing it through the factor market. But either way you connect, ultimately it is the business that is mainly going to take advantage of this foreign borrowings. Government may also take advantage of foreign borrowing sometimes. That is why it will be good to include it with the factor market. So other than these new additional points, the rest of the circular flow is exactly same as the three sector model. I am giving you exactly 5 minutes time, so don't rush up with this. Understand each and every component and write it. One advantage would be it will be a kind of recap for the three sector model anyway, and along with that the additional features of four sector economy will also be addressed over here. Let us move ahead and note down the equilibrium income under four sector economy. Now the total aggregate demand this time will be C plus I plus G plus X minus M, and total aggregate supply will be C plus S plus T. So try recollecting what you have learned under three sector model. it was C plus I plus G as aggregate demand and C plus S plus T as aggregate supply. Now what happens? The logic that you have learnt in national income chapter, that is the expenditure method of determining national income. Look at what we deal over there. We take the private final consumption expenditure, government final consumption expenditure, and we take net domestic capital formation, and then we take net exports, that is exports minus imports. So the equilibrium income is arrived at by taking all these components. So when it was three sector model, X and M were missing variables. We simply concluded C plus I plus G, and at equilibrium C plus I plus G would always match with C plus S plus T. So logically here two variables were introduced. Actually speaking, X should come along with C plus I plus G and M should come along with C plus S plus T. However, if you are doing that, it will not match with the equilibrium income, because from the consumption it is important to subtract the imports, then only you will get to know what is the gross domestic product in India. As a result, exports minus imports, that is the net amount of exports, will be added to the aggregate demand, and that will eventually give you the equilibrium income. So just keep in mind, X and M are the two new variables introduced. Otherwise these equations you have already learnt under three sector model, and logically C plus I plus G plus X would actually match with C plus S plus T plus M, but that will not be equilibrium income. That is why imports have been shifted to the other side as exports minus imports, giving you the net exports over here along with the aggregate demand. So please write up this new variable meaning, that is X stands for export and M stands for import. Now the equilibrium income is Y. At equilibrium point, I plus G plus X will be equal to S plus T plus M, and that is fundamentally because both the sides C is common, C can be eliminated. So in the three sector model we have seen I plus G equals to S plus T. So in four sector model, I plus G plus X will be equal to S plus T plus M. But keep one caution: if you want to determine the value of Y should not be taken as I plus G plus X. Value of Y should be taken as C plus I plus G plus X minus M. Let us move ahead and talk about the derivation of the formula under four sector model. So Y equals to C plus I plus G plus within brackets X minus M. This we are considering as equation number 1. We know the definition of these variables. Y stands for income, I stands for investment, G stands for government consumption, X is exports, M is imports, and C is basically A plus B into YD or A plus B into Y minus T, depending upon how you interpret the disposable income. So disposable income, that is YD, could have different variations, and we have learned 4 possible variations under 3 sector model. Any of that could be applicable over here. Here for simplification I have taken simply Y minus T, that is income minus tax will give you the disposable income. Thereafter the variable import will be having 2 types of imports. One is the autonomous constant import, and another will be import as a function of your income, that is M into Y. So this small m will be the proportion of your income that you are spending for imports. So this capital Y is your income, and M into Y indicates the amount that you are spending towards imports out of your income, and this capital M with a bar sign represents the autonomous imports, which could be considered as constant imports. So let us write up the meaning of these variables as well. Let us continue with the process of derivation, and now what you are going to do, you are going to substitute the value of C and M in the first equation. So this is the first equation. Now instead of C, we will be writing up the expansion of this variable C, and instead of M we will be writing the expansion of M. So let us do that. So Y will be Instead of C, we have written A plus B into Y minus T, and plus I plus G remaining as it is, plus within brackets X remaining as it is, and instead of minus capital M, we have taken minus within brackets capital M bar plus M into Y. And now when you are solving this, we will be first multiplying B with Y and B with minus T. Similarly, over here, when you open the bracket, the minus sign will be changing the signs within brackets, because outside the bracket we have a minus sign over here. So keeping that in your mind, just understand how to take the equation ahead. So we write Y equals to, look at this, A as it is. Now B got multiplied to Y minus T, so B into Y is BY, B into minus T is minus BT, plus I plus G remaining as it is, plus X remaining as it is. This minus sign getting multiplied to M bar, it becomes minus M bar. This minus sign getting multiplied to plus My becoming minus My. Now what we will do is, look at this term, this has Y as a variable, that is B into Y. This term is M into Y. Both of these terms are to be shifted to the left hand side. Why? Because we have the main variable Y in the left hand side. So plus By will be shifted to the left hand side, it will become minus By, minus My when shifted to left hand side, it will become plus My. So try understanding this point very well. The terms which have variable as Y are being shifted to left hand side. So plus By and minus My, both of these will be shifted to left hand side. So what we get now is, in the left hand side it will be Y minus By plus My, and in the right hand side A minus Bt as it is from this term, plus I plus G plus X as it is, and minus M bar as it is from here. Once you get this, notice one thing, in the left hand side you can take variable Y as common. If you do that, what you will get is Y into 1 minus B plus M, and that equals to A minus Bt plus I plus G plus X minus M bar as it is. Now because you want to find the value of Y, you are going to shift 1 minus B plus M to the right hand side, and this being a factor getting multiplied to Y, when it goes to the right hand side it will become inverse. So what we get exactly now is Y equals to 1 upon 1 minus B plus M into A minus Bt plus I plus G plus X minus M bar. Let us apply our learnings in solving questions, and we first begin with question number 17. Let us read this question. It says the consumption function C equals to 40 plus 0.8 YD, T is given as 0.1 Y, I is 60 crores, G is 40 crores, X equals to 58 and M equals to 0.05 into Y. Find out the equilibrium level of income, net export and net exports if exports were to increase by 6.25. So of course when these values are given, we are definitely interpreting this as these are given in crores of rupees, because this is exactly the same question that I have picked from ICAI study material. Over there they have mentioned 60 and 40 as crores and 58 and 6.25 just like that. So obviously it will be all figures in crores of rupees. So how would you solve this question? Carefully understand. Because it's a four sector economy, the equilibrium income will be always taken as C plus I plus G plus within brackets net exports, that is X minus M. You may just define all these variables, and you know how you have to define these variables. While defining the variables, when we wrote the consumption function, we have written the expanded form of the same. So 40 plus 0.8 into YD could be written as 40 plus 0.8 into Y minus 0.1Y, and then I standing for investment, which is 60 crores, G is for government expenditure, that is 40 crores, X is for exports, that is 58 crores, and M is for imports, where it is M bar plus small m into Y, that is 60 plus 0.05 Y. So once these variables have been defined, you can easily work out what will be the value of Y. Let us move ahead and solve the equation. So Y equals to 40 plus 0.8 into Y minus 0.1 Y plus 60 plus 40 plus 58 minus 0.05 Y. When you further try to solve it, Y minus 0.1 Y will become 0.9 Y. On the other side, you are supposed to open this bracket, that's all. So what you do is Y equals to 40 plus 0.8 into 0.9 Y plus 60 plus 40 plus 58 minus 0.05 Y. When you solve this part, 0.8 getting multiplied to 0.9 Y, it will be basically 0.72 Y. Other things will remain as it is, correct? Now what you do is bring all the Y terms to the left hand side. In other words, all the terms containing Y as variable, that is 0.72 Y and negative 0.05 Y, both of these terms you bring to the left hand side. Plus 0.72 Y will become minus 0.72 Y and minus 0.05 Y will become plus 0.05 Y. So this is what you will be getting in the left hand side, and in the right hand side 40 plus 60 plus 40 plus 58 remaining as it is. When you solve this, you get Y into 1 minus 0.72 plus 0.05 equals to 198. So Y into 0.33 equals to 198. Y will be 198 divided by 0.33, and that gives you rupees 600 crores as your final answer. Let us move ahead and continue solving the question further. Net exports will be exports minus imports, that is X minus M, and that will be 58 minus 0.05 Y. So now we know the value of Y, that is 600. We can substitute that and find the value of net exports. So 0.05 into 600 will give you 30. 58 minus 30 will give you 28. Now this is the end of the solution, but question has asked one more thing. What will happen if the exports increase by 6.25? So we will say if exports increase by 6.25, then exports equals to 64.25. Then your equation would change with the change in the value of exports, and when you modify this equation, what you would now find that Y into 0.33, which was earlier matching with 198, is now matching with 204.5. As a result, Y will increase slightly. So it comes to 619.697 crores. Let us move ahead and continue writing further. In your solution, you may now write imports as 0.05 into the new value of Y, that is 619.697, and now you get imports as 30.98. So your net exports will be the revised value of export minus the revised value of import, and that will be 64.25 minus 30.98, and that would give you 33.27 crores. Thus there is surplus in balance of trade as net exports are positive. Let us learn one new point over here, that is about the foreign trade multiplier. Before that, let me remind you, this is the equation that you have derived for the 4-sector model, correct? Now always what you have learnt, the multiplier, correct, is always 1 divided by 1 minus B. That is what you have learnt, right? The investment multiplier, if you can remember, B is the marginal propensity to consume. So 1 minus B will give you marginal propensity to save, and 1 divided by 1 minus B will be the investment multiplier. When it is a 4-sector economy, plus M is also involved over here, and this we then cannot call as investment multiplier. We will rather call it as foreign trade multiplier, that is 1 divided by 1 minus B plus M. So please write up that part, that is foreign trade multiplier equals to inverse of 1 minus B plus M, that is 1 divided by 1 minus B plus M, and define what is B and what is this small m. Small b is the marginal propensity to consume, and small m is the marginal propensity to import. Let us move ahead and take up the next question, that will be question number 18. Let us read this question. An economy is characterized by the following equation. Consumption is given as C equals to 60 plus 0.9 into YD. Investment is given as I equals to 10. Government expenditure is given as G equals to 10. Tax T is given as 0. Export is given as X equals to 20. And imports M is given as M equals to 10 plus 0.05Y. What is the equilibrium income? And calculate the trade balance and foreign trade multiplier. So you know what you have to do. First of all, because exports and imports are involved, it's a biggest sign that it is a 4-sector economy. So you have to find the value of Y under 4-sector economy by putting that particular equation. I have just explained you how to determine the foreign trade multiplier, and trade balance is nothing but export minus import, which you can easily figure out. So this question is actually now very simple for you once you have understood how to apply the variables in solving equations. Only new thing over here will be the determination of this foreign trade multiplier. So let us see how to present the solution. You first write the Y equation, define all the variables, and then you will be substituting the value of each of these variables in the Y equation. And I don't have to explain you this thing again. In the previous question I have explained you this whole part already. Okay, now you just have to do it exactly the way we have done earlier. All the terms which will have Y as variable in the right hand side will be shifted to left hand side to get the value of Y, and when you do that, you are going to get Y value as exactly 600. So I have not gone into detailed steps over here. When you solve this part, you will be getting the value of Y equals to exactly 600. You can verify your calculations right away. Alright friends, some students however could be having a little bit of discomfort when I directly write 600 over here. If you have this discomfort, don't worry, I'll explain you once again. Look at one thing. This negative 0.05y, when shifted to left hand side, it will become plus 0.05y, and plus 0.9y when shifted to left hand side, it will become minus 0.9y. So what you will get over here, it is basically y minus 0.9y plus 0.05y, which will actually give you 0.15y, and value of that will be 60 plus 30, that is 90. And if this is 90, which is matching with 0.15y, what will be the value of y? It will be 90 divided by 0.15, and you may check with your calculator. 90 divided by 0.15 will give you exactly 600. Another way to look into that is, once you shift all the components to the left hand side which have y as variables, then in the right hand side what will remain is 60 plus 30, that is 90. Now what you do is just figure out the foreign trade multiplier. What is the foreign trade multiplier? Let us check. If you see foreign trade multiplier, it is value of B as 0.9 and value of small m is 0.05. So how we have learned foreign trade multiplier? Check, it is 1 minus B plus m, correct? So it will be 1 minus 0.9 plus 0.05, which will give you 0.15. So inverse of that, that is 1 divided by 0.15 will be the foreign trade multiplier, and when you multiply 1 divided by 0.15 to 90, you will be getting exactly 600. So let me take you ahead and show you that calculation of foreign trade multiplier and trade balance. Trade balance will simply be the exports minus imports, and this time we are getting export minus import as a negative value, where it indicates that imports are more than exports. So we have trade balance is in deficit is the conclusion. Foreign trade multiplier will be 1 divided by 1 minus B plus M. I have already explained you this. I have already calculated it for you. You just have to write it down. So foreign trade multiplier in this case will be inverse of 0.15, and inverse of 0.15 is giving you 6.6667.